G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Please sure check out my links below, including exchanges I use and social media content that I post. All right, let's go. So from now on, I'm thinking of structuring my channel where I'll be just making weekly videos, okay? So it's structured, be on the weekend, okay? And yeah, probably not get the best attendance, views on the weekend because people are out doing things. During the week they're probably more active on YouTube, but I don't really care. It's not about views for me. It's about putting it out when I'm more available. And during the week it's a bit hard, a bit hectic. Full on with work. So I prefer to do things on the weekend, and I'll make it a weekly video from now on. So it's all condensed per the week, and be probably longer videos, but I'll make shorts out of them, so it's more digestible for the everyday viewer that doesn't want to watch half an hour to 45-minute videos or whatever long they're going to be. I don't know what it's going to be, but it could be an hour. So be prepared. It's going to be probably a longer show, but at least it's a weekly video. It's not every day or every 2-3 days, and don't want to bore you guys too much. So we're just going over probably the same thing every week. So, fear and greed, Bitcoin search trends, some tweets and news, into the cryptoverse charts, every now and again, and just go over some trading view charts, dominance pairs, Bitcoin, ETH, stock market as well. So let's get cracking. So the fear and greed index, we start off with Bitcoin, 68. So we're at greed, we're not extreme greed. But yesterday we were at extreme greed. So 76 was yesterday's reading. But you can see quite a big drop today. So 68. Oops, I just went too far there. And scroll down to the timeline, and you can see this is going back to the start of the year and saying we're being pretty flat, okay, for the fear and greed. It started at 74. Went down as low as 50. Okay, went to neutral for like one day, and then back up again, 60s, and back in the 60s now, so hovering around the 70s, and then back into the 60s territory. So being in the 70s since like 15th of Jan to now, okay, so a good half a month. If you go back a year, which I like to do, and you can see this was March, which is the top of Bitcoin. And you can see this downtrend in the fear and greed. And that was also what Bitcoin's price did. It was exactly the same as the fear and greed. So like this downtrend with the lower highs and lower lows. Okay, the lower lows. We've got this low down here in September. Around August, September was the lows. And we got really fearful. We've got 17. It's the lowest point. And hovering in like 20s, like below 30 is ideal for the fear to really kick in. And then from there we rallied up, and it got as high as 94 was the highest reading, which is very, very not rare, but it doesn't happen very often. When it does, we usually don't stay there for very long, or we can get prolonged periods of greed, which we did in 2021. We did get a fairly high greed reading for quite a while. I'll quickly show you that. We got to the 90s like in 2020. Got there, and you can see like 90, and we're there for basically from December, or November I should say, to basically fluctuated till February. So it was there for quite a while. That was a 2021 bull run, but that was a one-off. And this bull run, basically the mid-cycle peak was around here, and that was when it got to the 90s, okay? And then we sold off a lot, okay? So it didn't stay there for very long. This one was different. We had QE at that stage. This period here was no QE. It was QT, quantitative tightening. And this is during the QE phase when the Fed was printing money, buying assets, just going crazy. And the markets were doing the same thing. So we stayed greedy for a bit longer. And, it had this same sort of reading above 90. Can't really get it pinpoint it, but you can see this dot here is 90. And bang, didn't last long at all. So done the same thing, okay, here. I'm going to get the reading correct. I probably can't get it right. Okay, but you can see it November, right? And then bang, ever since then, we haven't stayed up there very long. So it was a quick spike like we did in 2019 and we did in 2024. So we're doing the same thing there. Not happening like this because we're in a different period. We're in a quantitative tightening, not easing. So yeah, that is the chart for fear and greed. And we are in a downtrend now. We're back in the 60s again. So that is that one. So onto the Google Trends. And you can see this is past 5 years for worldwide. Bitcoin, I like doing 5 years. Gives you more of a solid base. What happens? 1 year is not enough data. 5 years and above gives you good ideas of potential peaks. But you're hard to really predict. It's just what search trends are doing at the moment. And we'll go back to 2020 bull run, so the last one, and we peaked at 85. We had a big sell-off. Went to the 40s, back up. Okay, got to 80s again, and then back to the 40s. Okay, and then back up to 100 or so. If I can get that right, 100. Yep, that was the top. It wasn't the top, but for trends it was. And we had that mid-cycle, sort of mid-year, say, a summer correction. And then from there, our ultimate top, which was around November or so, the search trends was way down here. So obviously a lot less than back here, which was the first peak Bitcoin had before the big sell-off, okay? So it was the most eyeballs of Bitcoin at that period. And right now, like November was the sort of the peak for this cycle so far, bull run, and it's been 68. And then we've been going down and we're on a downtrend. So we're heading lower, which shows interest is very, very low, and we're still quite early in this stage of the bull market, which is quite good. And if you want to go even longer, you can go 2004 to present. Okay, and it's the same thing. It's going down. It's 24. Last time we were there, it was August 2024, which was a big sell-off. And we're coming down quite aggressively now. Really sharp peak there. Okay, November 46, and then back down. This is obviously 2021, and the peak, big Forex stage there. We're nowhere near that, okay? And obviously it was higher in 2017, 100. So plenty of time and a lot of cooling off, and it shows that people aren't really getting into it yet. There's no eyeballs. And I think a big reason why is the cost of living is actually so hard at the moment. Inflation's through the roof. People just trying to get by. Expenses are through the roof. So, yeah, you're not going to get a lot of investors at this stage piling in. And I think a lot of it to do with monetary policy, okay, which is another reason the Fed has to turn the money printers back on. And that'll be a true alt season, but we're not getting that at the moment. We're getting, interest is not quite there because everyone's living situations at the moment. It's hard to get by. So that's search trends. Now this is QT, okay? So this is the Federal Reserve press release from the 29th of January, okay? And in highlight, the committee will continue reducing its holdings of Treasury securities and agency debt and agency-backed mortgage securities, okay? So that is the gist of it, what QT is, and it continues. The next meeting they'll have is in March, so that'll be the deciding month where they stop QT, they end it, and that'd be enough to get an alt season. But at the moment, it's reducing it, so more pain for alts against Bitcoin, because that's what really this is the determining factor when it comes to monetary policy. Really does dictate the risk appetite for investors, and they literally stick to lower risk assets during QT, higher risk assets during QE, and it hasn't been any different. And you will see in the charts, we'll show you the Bitcoin dominance in these, and they overlay the balance sheet to get you an idea about this potential continuation of trend. Okay, so that is that. Another tweet, investing.com, is new tariffs on Mexico, Canada, China announced by President Trump. So these tariffs could be another reason why you get a sell-off. I think markets will be quite bearish until March or so. We'll see what happens. Yeah, the tariff just got announced and got placed on Mexico, 25% tariff, Canada, 25% tariff, and China got 10% tariff placed on it. So that is not good. You could be some trade wars going on in that regard. So this could add to the inflationary pressure if it really does kick in. The tariffs are not favourable, okay, comes inflation because the cost of goods, exporting costs will rise, and then any American importing overseas products will be obviously a lot more expensive. But American-made products can remain stable. Okay, so that's only a good thing. But if it's overseas products, they'll be more expensive. So that's could be a bearish thing for markets. We'll have to wait and see the impact that has, but definitely has an impact on the dollar, the US dollar index against the world currencies, and it strengthens the US dollar. Okay, in that regard. So CopyZilla posted this. In case you missed it, boxer Ryan Garcia launches a meme coin. 40% of all Ryan supply will go to charity. I always say that. A lot of the times, anyone that says that, be very skeptical. Okay. Token immediately tanks 90+%. Okay, Ryan deletes his post. So this is a post he made, and 40% of the supply will go to charity. It's not all of it, but some of it. And with meme coins that people launch, especially people aren't in the crypto industry, they just come in to make a quick buck. The result is this. Okay, so you get a chart that shoots right up, and then bam, that same day it just drops off a cliff and goes to nothing. So beware of these scams, and it's done by very people that you might look up to and won't expect to be this disloyal, but they do it anyway. They don't care, and they just delete their posts and move on. People forget. They know they get away with it, and they make heaps of money. And it's a joke. It really is, but it's the industry. And these meme coin launches is another reason why I'm bearish in the short term. Okay, there's been Trump's launched one, Melania Trump. There's a guy called Eric Voorhees. Okay, there's a lot of people launching them, and they're just dumping, because there's no fundamental value. There's no community backing it. So there's no real time to establish the coin. And you need establishment. Okay, you can't just buy the next hottest thing because this happens. Okay, get dumped on, and you are exit liquidity. Okay, that's what you are to these people. Now onto the crypto market cap trend line. Over time, you can see periods of undervaluation on this red line. Okay, so this period here from November 2011 to February 2013, it stays undervalued. Great time to buy Bitcoin, and then it goes above it, and then boom, the bull run starts. The post-halving year. Okay, the next year. So we go to 2015, and the period undervaluation was from January all the way to April of that year, post-halving year. So basically, a quarter of the year through, or third of the way through, you get period undervaluation. All right, so a long time to accumulate before it takes off and then breaks above this red line, and then off the races from there. We do have periods where it goes undervalued like this, 2018 to 19, goes above it, all right, and then comes back down, and then goes above it again in February 2020, then bam, the pandemic hits, goes back down below, and eventually breaks durably above it, okay, in December of that year, and then off the races from there. Okay, we had this period undervaluation in 2022 all the way to February 2024. We briefly went above it, okay, March, and went back down below it. We had that summer lull period, and then Q3, Q4, boom, above it again, and now we're coming to the point where we're on this line right now. It says here that, this is going back 31st of January. It's a bit slow data, but it's saying the undervaluation of, it says overvaluation, I should say. Okay, so it's overvaluated by 0.18. This should update, and it will be undervalued slightly because of today's price action. It's getting pretty bearish. So we're on that line. Will we break the upside? Will it be a fake out period like 2019? We went above it, and then back down. Or is 2020 period earlier, and it went a little bit above it, and then went bam, slammed down. So anything can happen. Any freak news, black swan events, whatever, just be prepared for it, because I do think the market's a little bit overheated at the moment, and that shows it here. So we have the Bitcoin price on the daily time frame. All right, and had this channel. We broke below it. We consolidated. Had this sort of base. 92K level, all right, And we had multiple touches here. We did break below and sweep all this liquidity. Okay, all these lows were swept in January. Okay, and then we shot up again. Have a sort of above this level. Okay, for now, I've drawn this line out here, which is 99.5K. So we had this touch here. We had this sort of indecision candle here, sort of base here, rejection here, sort of level here, touches here, touches here. So this is the rough, best fit line essentially. And will we hold this support and go higher? Okay, and that's it. Or will it be a matter of price not holding it, breaking back down, heading to 92K? If it gets down to 92K, it's not going to hold, okay? Touched that many times, once, twice, 3, 4, 5, 6, 7. Support levels, it's definitely going to break. And the target will be 85K, okay? Which is this wick here. Okay, that's the next level to target. If that doesn't hold, then I do reckon next level, we ran this high here at 73K. So there's touch here, all right? And here, obviously. So that'd be a level to watch if 85K doesn't hold. So yeah, that is not a great thing to see, but definitely you sort of expect prices sort of struggling right now. We have sort of swept this high here, so wick above it, you can see there, okay, and we could see some downside pressure, which is not what we want to see, but just be prepared. There's some like tariff news, this meme coins launching out left and right. Could be just a sucking liquidity out of people. And then you could see market conditions ease as quantitative tightening continues, which is basically more strict restriction on the market, liquidity. They're taking more money out of the markets. It's going to be a bit of a headwind for risk assets. But yeah, you got this basically bull market support band, all right? And it is rising, okay? And you want this, if I go in the weekly time frame, because it is a weekly 20-week and EMA and SMA, okay? So the EMA is in green, SMA in red, all right? And I'll just get rid of these drawings because it's annoying as heck. And you can see it is rising, and we are above the 85K level, okay, as I've drawn here. And we're at 86 for the SMA and at 88 roughly for the EMA. So it is rising. All right, and this will be the pivotal level if it does come back down here pretty quickly, okay, to hold, not above it, but around this bull market support band, okay? If it doesn't hold it, like it comes back down to it usually, like it does here. So it wicks it, okay, like it did in 2024 in April. And then it shoots up, okay, gets that initial bounce. And then eventually, it can break it, and it can stay up below it for a considerable amount of time. But, it's here in earlier that year, we wicked, we didn't touch it. Okay, so it's not always perfect, all right? And we did come back down to it here in 2023. We did see a bounce once we did get a reaction from that level. Okay, we didn't close below the EMA. As you can see here, we sort of wicked down and then closed above it. And same as in June, and then in mid-June there. And we had periods where it's sort of underneath it for a while and struggles. So it's not the be and end all. Once it breaks it, okay, especially in the weekly time frame, and you see you get bounces like this, nice beautiful bounce there, and we get rejections as well to the downside. You get deviations above, you get wicks to it, same as here. And I kept going. And the post-halving year, which is more relevant to now, I could hit September, and we got a huge reaction off that level, And this period didn't even get there. It just continued up and up and up and up. But that was a period when it was in QE, okay, quantitative easing. And you got periods like this where it does sort of consolidate around that level. So there's periods where it does, and then periods where it this obviously doesn't. It goes below it. So just watch out for that. I definitely will see it come back down and meet that level, whether it's 92K or around the 85 level. We don't know yet, so that's to look out for. Another sort of factor I'm looking at is the MACD, and we are getting a bit of divergence here weekly, which is quite evident. Okay, you got the MACD going down, and we crossed. Okay, as you can see, the blue has gone above the pink, and this price has gone higher. All right, so the price has gone higher, but the MACD has gone lower, which is a loss of momentum, and we could see a bit of struggling before it crosses back bullish again. But again, this looks like bearish sort of pattern playing out. And if you wanted to extend it back to here, it was basically level with this. So it was a 3-tap divergence. So it's high, and then lower high again. And then you can sort of extend this line out here. So you get 3 taps of divergence. Okay. So it's a triple divergence, which is even more powerful, and definitely see some downside pressure from this result of this cross. We'll have to wait and see there. But yeah, got to stack up multiple factors. All right, to confirm what's going on. And then one more thing to show you, if this is a risk metric. I like to do it on the 3-day time frame, get more detailed levels from it. So you got as high as 77, 78, and now we're reading at around 70. Okay, and we had this sort of same sort of thing where it's 80-ish, and we sold off the risk metric. So we are quite heated at the moment. That's another reason why I think we can see some more, downside pressure to consolidate a bit longer, because we're seeing a bit elevated risk, and we are in QT. So I don't see us exploding to reach the top of this level, like we did back in 2021 here. Okay, so we did get to the 90 level right here. That was when we sort of peaked out in February, and then we got a little bit higher levels, and this diverged, went lower as this went higher, and eventually price caught up with the risk metric. Risk metric just led the way, and then bam. So that's when you sort of be cautious when it gets these really hot levels, like 90, even here, crossed above this red line here, and that was pretty much the peak in 2017, and then boom, that was it. And same thing happened in 2013, as I'll show you. This thing bloody loads. The peak was went above 90 here, and then not long after that, we got a peak in 2013 and sold off. And you go back to the early peak in 2013, and we got durably above 90, and that was the exact peak. Okay, and sold off. And then you can go logarithmic, and you can go back. I'm not going to go back further, but you get the idea. Okay, and we are not at this overheated level, so we haven't peaked for the cycle, which is important to know. We still have room left in the bull market, but I want to see some consolidation first. Something like this. Doesn't have to go to 30, but you can go somewhere near it, and then take its time. And then whenever obviously this is not the best drawing. But yeah, the peak will be somewhere around Q4, so you could see some consolidation, and then eventually, boom. That'd be fantastic. That'd be an incredible buying opportunity down here if we do get that. Okay, so just be wary. I'll be updating every week on this, so yeah, you won't miss anything. Plenty of time. Just relax. Don't go chase these meme coins because they've been going crazy, the upside and downside. So don't think you're missing out on anything. Because this level is still elevated, okay? So that is Bitcoin. You've got Ethereum now. Ethereum is sitting above its, and we're actually on it right now, this bull market support band. Okay, we're wicking various times here. Okay, so will it hold or will it break through and head down to next support level at 28.50, which is I've drawn here. Touches here, touches there, so quite obvious. We did have a bit of resistance here. Didn't quite get there, but got very close. So this is definitely what I see the next level to approach. So it's very, very close and not far off it. If you measure it, we're really only 8% down, okay? And then I do see this area of demand. So you can see this big fat candle here, this big level. And usually these sort of big candles that take off, they get filled. All right, so that could be another factor with some bearishness. And we head down to 2,400. I don't know when, but I do see it coming back down there. Is this going to be the lowest low of of this bull market, and this is the last level to get in? I don't know. Okay, I would not bet anything on it. It's just another level. Okay, don't hate me if it plays out, and then after it plays out, it goes lower, and then you go, well, you said it was the lowest level. I said, no, I didn't. So it does go there, and then goes even lower and breaks. Don't blame me for that. Okay, I don't know, and it's been a bit of a macro uptrend really. If you zoom out, it's been going up. Price is definitely, it's high highs, high lows. So we are going higher, but we're just struggling at this $4,000 level. As you can see, it's touched it. We never closed above it. We got to it here in March 2024, in May, and now in December. So yeah, and we are coming down because we're struggling. It's 4K level. Will we just struggle here and then come back down and double bottom and then continue higher? That's definitely a possibility. Okay, it's double bottoming at this level here, somewhere even lower than 2,400. Could come back to 2,100 or even 2,000. It's probably a bit too low, but 2,100. Sweep these liquidity, something like this, go a little bit lower than these wicks, and then continue the upside. It's definitely potential, but it's not looking too bad if you zoom out. Okay, ETH still looks good, well positioned for a massive explosive move. Just right now we are struggling, and we are sort of bearish short-term time frames, bearish, and we're heading lower. Okay, so just for the short term we're bearish, but it's not over. Okay, the top's not in, and definitely see some more signs. And the MACD is definitely heading lower as well. If you go to the weekly, it's diverging, quite evident, the red line there. Okay, that's going down, and price has stayed flat. Okay, so price is flat, a little bit higher on a weekly closing basis. So we did close higher on the weekly candle in this one, slightly higher. If you want to close, if you do a weekly close, and price going down. So we're only just crossing now. So yeah, this is definitely bearish divergence. So that's another factor to consider as well. That's ETH, and yeah, we'll see if this level holds. Then target down to 2,400. Then we'll go to sort of USDT dominance, and I did mention on a previous video, maybe it was 2 weeks ago, I think the last one I made, and it was double bottom that's playing out quite clearly. As you can see, these 2 arrows here, there and there. A very, very common reversal pattern, and it seems like we are getting reactions off this level. Okay, I've still got a mini double bottom inside this double bottom, so you've got 2 there as well. So a double bottom inside a double bottom, and if you get to the MACD, we are crossing bullish. So this indicates we should see nice divergence there playing out as well. As you can see, nice beautiful divergence, and we should see price for USDT dominance head up, which is the inverse of Bitcoin. So Bitcoin USD is going up, this will go down. If this Bitcoin goes down, this will go up. So this is not good for the markets. And you can see clear, wide divergence. This is so clear, it's in your face, can't miss it. And I don't know how high this is going to go, but I've drawn this orange box in case it gets to these levels, or we could head to this supply level, which is just here. There or there is my guess for topping out, and then this will be the low for Bitcoin, and then continuation down. Okay, once it hits one of these levels, I don't know, and then eventually, boom, this will be the bull market, and it'll head lower. Okay, a lot lower. It'll break this level. I reckon it'll break down. Head, I don't know how low, but it'll get pretty low levels. Okay, could be 2%, could be 2.5%. I have no idea. But it's definitely going to get bearish towards the end of the year as Bitcoin gets so bullish. All right, so I am bullish long term at the end of this year, but not now. I'm just short term bearish. To see this divergence playing out, this flat level, and MACD going higher. And yeah, so that's USDT dominance for this chart. Let's go to Bitcoin dominance. Now, Bitcoin dominance, I mentioned before, the Fed balance sheet. Okay, so if I overlay the Fed balance sheet right here, it's orange squiggly line. Okay, so it's basically the inverse. So I've drawn green lines in between to give you a better indication of when these turning points occur. Okay, so that's important to note. So it's easy for the visual eye to see. And I'll draw in arrows. So if we go back to the start, we had this balance sheet that was going, okay, it was going up, all right, clearly up. Bitcoin dominance is going down. All right, so that means alts were outperforming Bitcoin, and then it went sort of sideways and flat. So it was really predictable. So they weren't reducing, they were slightly reducing, but it was very, very subtle. And then from this, Bitcoin dominance went extremely down, and it went all the way down here. Okay, as you can see, balance sheet got to the point where it was noticeably declining. Here it was definitely declining. Okay, it was lower than these levels, and then Bitcoin dominance shot right down to here. Okay, and what happened there? What happened here? We got the end of QE. So that was QE. It was bullish for altcoins, bearish for Bitcoin. Against altcoins, still Bitcoin went up a lot, but altcoins outperformed Bitcoin. Okay, I should say that. And then the balance sheet obviously went down like this. And what did Bitcoin dominance do? It bottomed precisely and then went up. Okay, Bitcoin dominance outperformed and took market share from the altcoins. Got as high as 73%. Got up to market share of the whole crypto market. And while the balance sheet was going down, down. And then when the Fed announced QE, okay, the money printing turned on. And obviously went right up to here. Quite evidently, what happened to Bitcoin dominance? Down. It went down. Went opposite of the balance sheet. It wasn't like a straight line down. It wasn't predictable. It was choppy, but nevertheless, the overall trend was down. Okay, while the balance sheet was going up. I'll just clear some drawings, but you get the idea. You know, this goes down. The balance sheet goes up. And now what we're seeing is ever since it bottomed out and QE was announced, in January they announced it, but they started in around March, okay, and it durably bottomed and then it went higher from there. So this went higher. Obviously, Bitcoin dominance has been on a big tear. Balance sheet is going down, obviously, you know. So it's evident. You know, you can see it clear as day what the trend is for dominance. You know, so periods of flat and rising balance sheet, Bitcoin dominance goes down. The balance sheet gets reduced, Bitcoin dominance goes up. The balance sheet increases, QE, dominance goes down. And QT, when the balance sheet gets reduced, Bitcoin dominance goes up. Okay, so very, very clear. And this seems like on a big tear at the moment. It's not slowing down anytime soon. People think that was the top. And we've got this lower high here. We've got this low. We never got a lower low. This low is higher than this one. So, and this is about to break this high. So we could be seeing it retest the highs here and then see if that is the top, around 62%. Okay, 61.5. Or could go higher. It all depends on this balance sheet. This balance sheet continues rolling off, which it is going to do that until roughly March, somewhere around here. This could be the point where they flatten the balance sheet or they increase it. And when they do either one of those two, I do think by this stage, Bitcoin dominance will top and it'll fall off a cliff. Okay, so that'll be it for dominance. Once the Fed indicates whether it's going into quantitative easing or not, okay, is a determining factor. So we'll have to wait and see that one there. And I think that's really about it. I don't have to go through the other ones. This one here is probably another one I can just finish up on. We'll keep this as a crypto video. Actually, won't do stocks. We'll keep the crypto. And you can see it is falling pretty sharply now. Okay, the total 3 minus USDT divided by Bitcoin. And this is basically alts versus Bitcoin. And it's basically inverse of Bitcoin dominance. So it's opposite. It follows the balance sheet pretty closely. You see periods of QE, balance sheet goes up. So does alt Bitcoin pairs. Okay. And it hits the basically 1 level. Like it did here, it deviated above it. It came back to it in the 21 cycle. And in 2017, it was established at that level, which is basically alts equaling one Bitcoin. The price of Bitcoin's market cap, I should say. And then when obviously the balance sheet goes down, old Bitcoin pairs have been going down. I mean, bleeding, okay, to Bitcoin. Same with this QT period here. It's doing the same, did the same thing there. It topped, and then bam, went down. QE, it went up, okay? Quite obvious. So that is that, all right? And I do see it coming back down to 2.25, so a quarter of Bitcoin's market cap. Sometime soon. I don't know, probably sooner than that, I'd say. Find a bottom and then just rip. Okay, it could go into 2026, okay, like it did here. It went past the post-halving year. It went into 2018, which is the bear year. Went to April, okay. So you had a secondary peak here. This could really extend into mid-2026. So don't think it'll top at the end of the year when Bitcoin tops. It could top later on. Nevertheless, Bitcoin would have topped before then. So don't wait for this to top, okay? Because Bitcoin could be in a downtrend well and truly before this. Oh, when this happens, I'd say. So I do see it coming down to here, okay, as it did back in the 21 cycle. Here, clear touches, okay, support levels. It established it back in 2017. It established it here. Came back in the next cycle, all right, for a long, long time, even into December, January of that year. Okay, and we sort of took off from there, February. So it did take a bit of time. Then it just went absolute bananas. And by May, we found a little peak here and triple top. 2, 3, and then down. Okay, but it all depends on this balance sheet. Whatever the balance sheet does, so it's going to continue to roll off until March. And in March, if it goes up or sideways, either outcome is bullish for alt Bitcoin pairs. So this chart will go up either way. If they say QT continues and it keeps going down, then yeah, continued pain for the altcoin market against Bitcoin. So that is that chart. And we'll finish on that note. So I hope you enjoyed this video. Just going over different metrics like the fear and greed, seeing it starting to get back to the 60s again after it's been in the 70s for a bit of time, from mid-January to now, and we're finally seeing it back down again, or slightly. It did have a big drop from yesterday, okay, from 76 extreme greed to now at 68. Looked at the Google Trends data, seeing that's in a downtrend as well, so not good signs for retail coming back just quite yet. Shows that we're still early, okay, in this bull market, which is good, plenty of time left. We also looked at some tweets, some tweets from Benjamin Cohen. We posted the Fed balance sheet, seeing its QT is continuing, okay, until March. See what happens from there, what the Fed will do. That will determine where altcoins against Bitcoin will head. And I do see them going lower as QT continues until March. And from there, we'll have to wait and see. Assess it once the Fed ends QT or starts QE on an emergency or bad economic data print or something like that. We'll see. We looked at also another tweet about tariffs. Trump introducing tariffs in Mexico, Canada, and China, which could be yet another bad thing for markets in the short term. So I think it could be, and it could be inflationary pressure. We'll have to wait to see. Definitely the dollar index will rise, and continue to rise until he changes his mind on these tariffs, or he reduces them, or does something with them. But it's definitely short-term bullish for the dollar against other currencies. It's definitely easy to predict that one. Yields could definitely rise. We'll see. What else? We looked at the tweet CoffeeZilla put out calling out Ryan Garcia, pushing a meme coin and pumping and dumping it. Lied to his fans. And, the story about that one, it was dumped. And also, we talked about charts. Okay, the total market cap is slightly overvalued as of end of January. But when they update the data for start of this month, you'll see that we are going undervalued now, back below the red line. And areas where we're starting to look quite attractive again, finally. But the risk metric I showed you in the charts is still elevated at 70. So I do want to see that below 30 to get me into the markets. Okay, it's not what I'm liking at the moment. I like seeing risk very low on Bitcoin. I also looked at Bitcoin price and seeing that we are still very well above the bull market support band, sitting around 85k, 86k. So still some catching up, get close to the bull market support band. We also looked at MACD divergences, not only for Bitcoin, but for ETH. ETH's looking at the same thing, getting a big divergence in the weekly. Same with USDT dominance. Okay, so stablecoin USDT, I can't even say it properly, is heavy divergence, and so is Bitcoin. So yeah, I do see some short-term bearishness for that regard as well. Okay, double bottom pattern playing out quite evidently, and looked at some dominance, Bitcoin dominance, seeing it'll continue to rise, and total 3 minus USDT divided by Bitcoin is the opposite. That'll go down. Bitcoin dominance go up as QT continues till March. So definitely see some pain for the altcoin market. I see coming up. Bitcoin will hold up okay, but alts will get obliterated, including your favorite meme coins. I'm not talking about your coin, but someone else's coin. So just be prepared. Don't go in yet. I'll be very cautious now. Hold off until some clear signs. The Fed is pivoting. At the moment, we're not seeing that. Okay. Another important factor I did not mention is next week's labour market data coming out is going to be very crucial. Okay, so make a video at the end of next week describing what happens, and by the end of that week, Friday, we should have the data for the unemployment rate and the non-farm payrolls, which would be crucial to the direction of where Bitcoin is going to head. Okay, that is the nail in the coffin. If you get numbers 4.3 and above, that's going to be bearish. If you get numbers around 4.2, or stay steady at 4.1, or go to the 4, or go to even less than 4, that could be good for the markets. We'll have to wait and see how the markets react to that data. We have no idea. And the bond market to react to it as well. And then the week after that, we have inflation numbers coming out. So pretty hectic next couple of weeks. Stay aware, stay cautious. Definitely have a strategy in place to prevent any FOMO or any emotions. You got to get rid of that stuff because it's brutal in these markets, especially the crypto markets, which is what I'll be participating in for this year. Definitely not going to be friendly to people who are impatient and who are FOMOing and fall for influencers and sentiments and the rest of it. Just stay grounded, have a strategy, and if you follow this channel, you might do okay. So I'm not a financial advisor, but you get the point. You've got to stick to a strategy you are comfortable with and it's been proven over time, and it just blocks all the noise out. All right, forget about what everyone's talking about. Yeah, we have coins that pop off here and there, and you'll miss out on them. That's just how the market is, and hard to pick them. So best stick to strategy, find your projects you like, and execute when the time prevails. So when that happens, I'll let you know when I'll be entering, but not yet. Okay, so it could be April, March, so a couple months out. We'll see. Anyway, so if you enjoyed the video, we're doing them weekly from now on, and we'll sort of mix them up. Won't do the exact same charts, but maybe we'll try and keep them consistent. We'll see what happens. But yeah, news changes, things change, different economic factors play a role. So I'll be covering slightly different data and news, but charts remain pretty consistent, depending. If you comment and ask me to chart certain things, I might pull them up as well and go a bit longer. So yeah, that is the schedule from now on. So weekend videos go for roughly half an hour to an hour, and I'll clip it too. So clips to ensure that everybody's not missing out if you don't want to watch the whole video. So if you like this style of content and this format, please smash the like. As you can see, the fireworks going off. I want you to smash the subscribe button. Comment your thoughts below. Don't forget to check out my links below. And I will catch you in the next one. Cheers.